Let's take a look at some information and charts on 1inch for BraveNewCoin. So 1inch is a DEX aggregator routing swap platform. Probably going to have to need to make a new word for that soon because of the bridging mechanic. The glory days of DEX aggregation and bridging will probably involve multi-chain trades in some way, shape, or form, and we'll probably encounter mass exploiting at some point in time, right? It's early, this technology is early, but if I had to guess, that's coming eventually. And they also have limit orders other than just market orders, tons of different coins, anything you can think of, it's all available here on chain. Obviously, the detriment to this right now on ETH is ETH fees being extremely high and prohibitively expensive for smaller orders. And if we just look at the volumes here, probably the first day, this is DEX volumes, the first day that I've noticed sushi ahead of the volume, maybe ever. One reason they're probably getting ahead here is because ETH fees are high and because sushi's multi-chain. Like, it's more bridgy than anything else. They're just saying yes, 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 gobbling up all the bridges, which is what they need to do to outcompete Uni. I don't know if Uni ever goes multi-chain. They would be smart to go multi-chain, but I don't know if they ever will. They're very ETH maxi in their mentality. They were a first mover. They're stupid, silly, rich on the dev side of things. So they may feel as though they don't need to, resting on their laurels. I don't know. I don't know what their mentality is around that political landmine in their interests anyway. So this could be a combination of ETH fees and sushi just being multi-chain. I don't even know if this actually tracks non-ETH transactions. I assume it does, but maybe it doesn't. Maybe this is just beating Uni outright on ETH. But in any event, 1inch is down here. It's third from the list here at 12%. There's also 1inch LPs, 1inch limit orders. For the most part, the pooling, the governance, all that stuff on 1inch is down significantly from where it was. We'll take a look at that. But that's not going to really move the needle at this point. What's probably going to move the needle is pooling APYs on future chains, bridging chains. I'm guessing there's a ton of that going on with sushi, incentivizing mining liquidity or trading liquidity, whatever it is. Whatever Ponzi-nomic is going on is certainly helping the bridging incentivization. And for the most part, 1inch's only direct competitor is ZRX Matcha, which is down way down here now. Again, they're only ETH, I believe, currently. They don't aggregate across ETH or anything like that. So if ETH fees go up, these volumes go down. That's just the name of the game. That's how it works. And if we look at over multiple days here, I don't know why they cut off 1inch unless I'm blind, but I don't see it on here. Even on the monthly list, you can't see 1inch for some reason. But 1inch historically is generally been a growing slice of the volume DEX aggregation stuff. Now, if you look at TVL, it's down significantly from where it was because there aren't any incentives to lock your money there anymore on Ethereum. Trading volume is flat, not super exciting on Ethereum. Transactions down on Ethereum. Users down on Ethereum. If we look at BSC, trading volume's down. Transactions are actually up. Users down, up, flat, whatever. Unexciting on BSC, but transactions are up. Probably because it's cheaper to do transactions on anything that isn't ETH right now. Poly volumes flat, transactions up, users way up. So there's probably some sort of mining incentives as far as trade mining or pool mining, or just people using Polygon because the trades are way cheaper. That's going to push up these user numbers. As most of this stuff goes multi-chain and bridging gets involved, it's going to get more complicated to figure out which volumes are worth paying attention to, which TVLs are worth paying attention to. Can all this stuff even be tracked without losing your mind? Are some of these going to contract? Are we going to see this mass bridging expansion and mass contraction and then just ending up with ETH layer 2s? I don't know. We're living that experiment right now. We're watching real time. If anything, it adds pressure for ETH to do something, right? Necessity is the mother of all invention. And EIP 1559 was great for pumpamentals, but it hasn't been so great for actual fees with people using the chain. If you look at transaction counts for 1inch, this was the initial launch here. We zoom in a little bit. Transaction counts are basically all-time low still. Average transaction value is rising with ETH fees. Not unheard of, not unusual. But to get more bullish on the token, I'd certainly want to see transaction counts rising Active addresses also in the fill here at essentially an all-time low. Very little on-chain activity, and I assume this only tracks ETH, and that's going to be a challenge for places like Coinmetrics as well. How are you going to track and aggregate all this stuff and label it? Like, it can be done theoretically. I just don't know how easy that is to do on the back end. You know, do you need full nodes for every single bridged chain? Sushi, for example, has like 20 chains that they're bridging to. It's not 20, it's probably like 10 to 15, but that gets increasingly complex from the data side of things. To marry that all together, you have to collect all that from all the chains. So I'm sure it can be done. It's going to take some time. But unless you're looking at the whole picture, it's going to make some of the analysis like this less valuable, because this looks not great, right? Transactions down, active addresses down, NVT way up, which is an inverse metric of economic utility relative to price. MVRV in the fill, though, is declining, continues to decline, which suggests market cap relative to on-chain activity is pricing itself back into reality. It's getting less overbought and leaning into oversold eventually. For most coins, anything around a 2x multiple is massively overbought. For this DeFi stuff, it's getting hard, or it's been hard to decide if MVRV even matters and what that number multiple is. I think we're still early. For 1inch, it was just released like Christmas Day, right, last year. So the thing has a ton of time to figure out if any of this data really matters. But fundamentally it works and it's a needed service, and I don't think it's going anywhere. You know, again, this is much like the ZRX conversation. I love the service. I love the aggregation. As a trader, give me the quickest, cheapest, fastest trade I can get, but does it need a token? Now, what value does a token play here? I don't know. I couldn't tell you, honestly. Yes, there's governance. You know, you can look at all this DAO stuff and dig deep into all this stuff, right? But does it matter? Does it move the needle for price at the end of the day? Personally, I never think at most times that it does, right? It just doesn't matter. And it looks like most of their farming programs are over as well. Moving on to technicals, the 5200 EMAs, VPVR, volume, RSI. This is on the 12-hour because the daily is too zoomed out based on the available data. Again, this just started trading at the beginning of the year, so we only have 9 months of trading activity. And it basically exploded post airdrop, went sideways, retraced a bit, kind of harder than everything else, and is mean reverted back to the 200-day moving average. Ideally, this continues into this schematic roadmap, potentially back into the previous range. If this thing keeps knocking on the range and does not enter the previous range, that does not bode well for bullishness in the next quarter. And it's hard for me to get fundamentally behind stuff like this, because what is the use case? What purpose does it serve? Why should I buy it? Why should I hold it? What does it do? I couldn't tell you. Honestly, I couldn't tell you. I thought at one point it gave you cheaper fees, but I don't even think that's the case anymore. I know they had a Chi token, this alternative gas thing where you could pay for gas ahead of time. I don't know. I don't know the use case, honestly. It's not a fee generating token as far as I know. So it's going to have problems accruing value unless they figure some stuff out soon, I think. But currently it looks okay. It doesn't look super ultra turbo bear. Needs to hold above 250 for sure. It definitely needs to hold the previous low. All of DeFi is taking a beating because of ETH fees right now. On the 12-hour cloud, it's in the cloud, it's neutral, it hasn't quite flipped bearish yet, but again, it needs to hold above 240, 250. On the daily cloud, I was working on this edge-to-edge trade to around 450, and at this point, that move is at threat as it drifts below the Kijun, below the cloud. This is your stop-out area for the entrance of this trade, which was around 325, let's say. You're reaching the maximum you'd want to be holding this based on dynamic cloud, dynamic support resist levels on the cloud. Basically, you don't want to be long with a bearish Kumo breakout, you know, and it's still got plenty of time. We may not see actual altcoin rotations that haven't moved until late Q4. This isn't even mid-October, and it's, as far as the cloud is concerned, the projection, and it's still bearish. So this probably won't flip bullish if it does until early November, right? So this has a ton of time. I wouldn't write it off just yet, but it definitely looks more neutral than a lot of stuff that's popping off right now, like Solana. In 1inch BTC has this inverted head and shoulders quality to it. It's not perfect. It's not there. Volume is whatever, right? Like, that's fine. If volume matches these chart patterns, great, excellent. Makes it more likely to play out. If it doesn't, for me, it does not nullify the probability or possibility of this playing out as expected. Does it decrease the probability? Yeah, but I wouldn't say it's just garbage because the volume is whatever. RSI isn't really helping you here, and VPVR is basically telling you, yeah, anything below 7,800 sats, previous local highs basically, is going to be an issue for bullishness. So it needs to get above that first, right? Then let's talk about bullish 5,200 cross, making higher highs. It just needs that strength first. So again, neutral leaning bear, but still has potential in the next couple months. And then ETH is 1-inch ETH is full bear, has been bear since April 24th when it consolidated at these highs post airdrop and then just couldn't hold on to them relative to ETH. And since April, it's just progressively made lower low, lower low. It's kind of drifted and snaked around this 50 EMA, backed basically to the airdrop low in January. So even with that, it does have bullish divergences here, like a lot of these DeFi ETH pairs do. Based on technicals, these charts eventually should flip around because bearish momentum is continuing to get weaker and weaker and weaker. Ultimately, though, you need ETH fees to come down in a serious way, I think, for any of these DeFi tokens to do well. You need people to use DeFi in order for DeFi to do well. If people aren't using DeFi, DeFi is not going to do well. If volumes are down because fees are high, DeFi is not going to do well. If people are going to Solana, Tezos, wherever else, Phantom, because ETH fees are too high, it's just like the BSC situation of a few months ago, right? So against ETH, it makes sense that DeFi is not doing so well. So what I'd be watching here is the 5,200 cross. I'd be watching this bull div to play out. I'd be watching for bull div continuation, basically. If this goes any lower, if this pushes lows just slowly, just watch this div, because eventually the div should play out. Now, it may take 2 months, it may take into November or December, but it does look like of all the times to buy 1-inch over ETH, this for me personally is when I like to rotate into this stuff, because you're seeing this multi-month bull div. Now, fundamentally, of course, I'd rather hold ETH than 1-inch because, like I said, I don't know what the general purposes use case of it is, right? Other than like incentivizing pools and APY on 1-inch, which aren't necessarily in existence at the moment. So a lot of caveats, a lot of things to pay attention to. I think in general, if fees come down on ETH, DeFi should do pretty well into the end of the year. Let me just mention the ETHBTC fund and DeFi portfolio I trade for Technique Capital on Enzyme.finance, a non-custodial portfolio management tool where you can send ETH or USDC or just watch what I'm doing. You can see everything, including AUM performance allocation. You can see all the vaults I'm in here on Comp, on Yearn, on Aave. We do have 1-inch here at a pretty substantial allocation and also getting yield on that through Yearn. And you can also see the trades I do at the bottom here as well. That's all for this one. Like, dislike, comment, share, subscribe, and happy trading.